High probability setups with the bullet. So guys, as you know, with the bullet, we can use it in many different ways, but we are looking at high probability setups. So what do I mean by that? What I mean by a high probability setup is that we've noticed that if you take this in a large sample size, you have more wins to losses. Okay, the ratio of your profits to loss is a lot greater. Okay, and they play out a lot more than other bullet setups. Okay, now what is the key ingredients for the bullet high probability setup? Well, what we look for is we look for an ascending nature or a descending nature. Okay, so we look at price, for example, price coming up, pulling back down, coming up, pulling back down, coming up, pulling back down, coming up, pulling back down. Now, this is an ascending nature. Okay, and we also look for a descending nature. Okay, so when price is coming down, pulling back up, down, pulling back up, down, pulling back up, coming up. So what is a descending and ascending nature telling us, first of all? Well, what it's showing us is that price and momentum is slowing down in that direction. Okay, so every time price action takes out a high, it can't be sustained and has to be pulled back. So someone is selling. Again, a high is taken out and it's pulled back. It can't be sustained. So it's a bit like an elastic band. Someone is pulling it up and the elastic band is pulling back. And it keeps doing this. And the longer it goes on, the more that it shows that the momentum to that direction cannot be sustained. Because every time they're breaking the highs, they're pulling back, breaking the highs, pulling back, breaking the highs, pulling back. Okay. And we know, because of our experience in the markets by looking at price action, we know that if the market is going up, but yet it can't be sustained because we have an ascending nature, that majority of the time it will drop. And the same goes for if we have a descending nature. If price is going down and it keeps pulling back, it's showing that the momentum to the downside can't be sustained and that it is more likely to go up than it is down. Okay, so then how do we tie this in with the bullet? Okay, now we know with the bullet, we look for the most recent high or low to be broken, okay, and then to be pulled back to. So what do I mean by that? So let me draw you a diagram. So if we have an ascending channel, okay, price goes up, pulls down, up, pulls down, goes up, pulls down, goes up, pulls down. Now we know in our mind, okay, the market can't be sustained to the upside. It can't continue upwards because we're creating an ascending nature, showing us that price action is more likely to go down than up. So how can we use this to our benefit? Well, we can get in the bullet, okay? And why is this high probability? Well, let me go over it. So if you can see, we have this ascending nature here, okay? This is the most recent low. Okay, the trend is still up. We're breaking highs. We're not breaking lows. Okay, so because we're breaking out of the highs, we are still on an uptrend. Okay, until we break out of the most recent low. Okay, until the most recent low is broken, we are still on an uptrend. Okay, now as price comes down and breaks this low, okay, it's showing us that not only have we confirmed that the ascending nature is playing out to the downside because we have a trend change, we also know that it's very high probability that if we come back to this area, that we're more likely to reject and drop. Okay, so price action comes up and then drops. Okay, now this happens very, very often, and we call this a high probability bullet because, as you can see, we've got the ascending nature. We know on our side that price action is more likely to go down than up. Okay, price action confirms that by breaking the low. Okay, and then what we do is we get a pullback to that level. Okay. And this is very high probability because you've got all of these factors. Okay. And another real great benefit from this is you're at a top of a trend, right? Okay. Now we don't pick tops and bottoms, but we get a trend change, which is telling us that price action is more likely to go down than up because we've had an ascending nature. The trend has changed, confirming that ascending nature wants to go down. Now we have the first pullback of that trend. Okay. Now, this is why it's so high probability because you're in on the first pullback of a trend. So, for example, you're in at the top of a move. Okay. Now, if price action wants to continue down with that trend, you're likely to be in one of the best positions you can be with a trend. Okay. Now, this is why it's very, very high probability because not only have you got all of these factors that you've got an ascending nature, we know that price action wants to go down. We also know that the trend has changed. And then we've also got this first pullback, okay? Knowing that it's going to be the start of a move. Knowing that if it trends, we'll be at the top of that move, okay? And this is what allows us to take advantage of the market because not only are we at the top of this move, but we use our management, okay? So as the move continues down, okay, with a trend, we're managing all the way down, okay? And as you know, we take advantage of that whole move, okay? And this is why we are able to extract so much percentage from the market using this strategy. Okay. Now, obviously, we don't want to just jump into every single bullet because all you're going to be doing is breaking a high, pulling back, breaking a high, pulling back, breaking a high, pulling back. For example, you could create an expert advisor to do that. Okay. Now, I'm not saying it won't be profitable, but we don't want to just be in the market for the sake of the market. What we want to do is be in the market, as I've just shown you here, a high probability setup, knowing that when these do go, you're going to be at the beginning of a move. Okay. And because we've got the confluence of an ascending nature and we've also got the first pullback, it's very high probability. Okay. So that's what we currently look for. I'm going to show you also what we look for on a descending nature. Okay. It's very much the same, just the other way around. So as price is coming down, pulling back, coming down, pulling back, coming down, pulling back, we can see it's descending. Okay. So we have a descending nature. So we know that through price action and our experience, that price action is more likely to go up than it is down. Right? So what do we wait for next when we're looking for a high probability bullet? We wait for this high, the most recent high, to be broken. Okay. That confirms with us that this descending nature has finished and that it wants to go up. Okay. So once we break that, then we expect to wait for the first pullback to that level. Okay. That's the highest probability because we know then that price action has given us all of the factors. We've had a descending nature. We've had a break of the most recent high, which has told us that the trend has changed. Okay. And then we look for the first pullback to that level, which we know is very high probability. And it's the first pullback of the move. Okay. And then once that move goes, we are going to be at the beginning of that move, which allows us to make a lot of percentage. Now, even if, okay, sometimes what happens is sometimes it will set this up, okay, and sometimes it will just break the high and retrace again, showing us that it's a little bit descending. Okay, so for example, here we've had this descending nature now, you've had this break, okay, you're in on this trade, okay, near enough at break, like near enough straight away, you hardly have any DD, okay, no drawdown. Then price comes up and pulls back down again. But because we've broken this most recent high here, okay, it allows us to reduce our stops to here, which are near enough at break even. Okay, so even if this comes up, takes out this high and then drops again, okay, we significantly reduce our risk. And this is another reason why this is such a high probability trade. Okay, because of all these factors that go with it, that even if the trade doesn't work out, you most of the time get out near enough with 0.1 or 0.3 loss. Okay, majority of the times, sometimes at break even, because sometimes it will tag you in near enough and then drop straight away. Okay, this happens very often. And another key factor that I wanted to share with you guys is that you have to add in your spread. Now, every broker is different out there. Some brokers have a 1 pip spread. Some brokers have 2 pip spread. Some people have an ECN account, which have a 0.1% spread. Okay, so everyone's spread is different. So when you are trading the bullet, for example, sometimes we've noticed over and over again that it taps the area just by not even by a pip, and then runs off. Now, if your spread is 2 pips, you're not going to get into that trade. Even if your spread is 1 pip, you're not going to get into that trade. So what I would suggest when you first start this out and you back test, okay, if you're going to back test it and you're going to use, for example, 10 pips, okay, add 2 pips to that trade. Okay, so instead of having 10, have 12 just to start with. Okay, so that you know that you're getting into these trades. And if you know that you keep getting in and there's an extra 2 pips there, well, then reduce it to 10 pips. That's completely fine. But I would suggest adding them extra 2 pips so that you're actually in the market, because there's nothing worse than seeing everyone else in the community grab that trade and you're not involved because you missed it by 0.5 pips or you missed it by 1 pip. And it happens a lot. Trust me. I've seen it. I know. Okay. And I've known through my experience that I want to be involved in that. And again, it all comes down to your back testing. The more and more that you spend time back testing and really getting to know the strategy, you would know that you need to add a couple of pips, because you know majority of the time it hits that spot and it bounces straight away. We most of the time have very, very little drawdown. And that's another big benefit for this. Okay. So remember, guys, also we only ever use 1% risk. Okay. That is paramount. Always use 1% risk when you are trading. Okay. So guys, what I want to do now, as you can see, I've given you a little demo here of what we're looking for and why we're looking for it. Now, what I want to do is run through the bar replay and show you some trades, okay, live, how we're getting into them, the thought process behind them, because obviously me showing you this is fine, but for you to actually see it in back testing, it'll be a lot easier on your subconscious mind. Okay, guys, so I'm going to dig in now and show you what I'm looking for on this pair. Okay, so here is the Aussie US dollar. And as you can see, guys, the market is showing us through price action, and it's become very ascending. Okay, how can we see that? Well, if you look at the highs, they are breaking, they are retracing, they're breaking, they are retracing, breaking, they're retracing, showing us that we have this ascending nature. So guys, what are we looking for when we are looking for the high probability bullet? Well, we know that if we have an ascending nature like this, yeah, we know that we're looking for a break of the low and then a retrace and then a drop. Okay. Now, why is that high probability? It's high probability because we have an ascending nature. Okay. We have price action, then show us that it's confirmed the move down by breaking the most recent low. And then we get a pull back to that level and then drop. Okay. Now this is very, very high probability for the reason that I showed you in the video is that we've got an ascending nature. We've got the first trend change and then we've got the first trade with the trend. Okay. So it's normally at the top of a move. Okay. So we're going to play this and look and see what we can see through price action. As you can see, price has pulled back. And then it's taken out the most recent high here. Okay, oops, excuse me. So you can see now we've taken out, let's push zoom in a bit. You can see now that we've taken out this most recent high here. Okay. And then if we go backwards, where's the most recent low? Well, the most recent low is here. Okay. And then as you can see, price action has just broken at that high. It hasn't shown us any real momentum. Okay. Again, we've broken the high and we've just retraced. Okay. Not showing us any real momentum to the upside. And still, we know that price action is more likely to go down than up. Again, guys, remember, we don't guess. We never guess when we are trading. What we do is we allow the market to show its hand. Okay. But we're prepared. We're prepared because we know it's ascending. Okay. And we know either it's going to come down, retrace and drop, or it's going to impulse up. Okay. So we have this in the back of our mind knowing. And the more that we have a move that keeps ascending and ascending and ascending, the more likely we're going to get a big move or a big push in the opposite direction. So for example, this is going up and we are ascending for a while, which means that the drop will be bigger. Now, why is that? Well, if you think about it, every time that the buyers are taking out highs, someone is selling. Every time they're taking out the highs, someone is selling. Every time someone is taking out a high, someone is selling. So eventually, the people that are buying are going to give up and the sellers will take over. And that's why it will drop hard. Okay? So just imagine like an elastic band. Every time you pull it, it springs back. Pull it, it springs back. Pull it, it springs back. Eventually, it's going to spring right back. Okay? And it's the same with the market. Okay? And the more and more you get to learn price action, the easier you're going to find it. Okay? And that's why these ascending and descending natures are so vital, because they allow us to see that the momentum has shifted. In a sense, we're going up, but we're not going up with any sort of momentum, showing us that we're more likely to drop down than to go up. Okay, so we always have that in the we bear that in the back of our mind, knowing that price action is likely to drop. But again, we're not guessing. We're not trying to jump in at the top. We're waiting for confirmation. We wait for confirmation to break the low, to confirm that we have a trend change, and then we get in once we get the first pullback. Okay, so as you can see, price action is still going up, but as you can see, it's struggling. Okay, there's no real momentum. As we go back here, we can see that this is the most recent low. Okay, and again, we're just waiting to see what price action has to offer. Okay, so you can see we shot up there, but then again, we've come back down. Okay, showing us that price action has no momentum. Okay, so we can either pull back a bit, okay, come back down, confirm to us this move, or we can continue up. Okay, and again, like I said, the more that we ascend, the quicker we're going to drop. Okay, so as you can see, we've just broken that high. Now, will we retrace? Well, we've got a very candle that's not showing momentum. It broke the high and dropped straight back down. Okay, so there are the highs now. And if you go backwards, okay, you might wonder why this isn't a low. Well, as we know, if you look at the high and low video that I've put out, you'll see that this high here has broken the previous high, which means that that's still part of the up move. Okay, so I'm not looking to get involved in anything until we break this low, okay, and then pull back to it. Okay, so at the moment, we know exactly what we're waiting for. We forecasted it and we have it in the back of our mind, which means we're always prepared. And the more prepared we can be, the less likely we are to miss these trades. Okay, so as you can see, price action now is pulling back. Okay, and what we're waiting for is a nice push of this low. Okay, and you can see now we've pushed this low. Okay, now as you know, what I've stated before is that this is a very high probability trade. Okay, because this is now confirmed, okay, that we're going down. We've confirmed it because we broke the most recent low, telling us that the trend has changed and we've had a large ascending nature. So it's more likely to drop than it is to go up. And now we've just had confirmation that we're doing that. Okay, so like I said to you guys, what I'm going to do is I'm going to get in 2 pips below every most recent low or high, depending if we go up or down. And then what I'm going to do is I'm going to add 2 pips to the stops. So I normally use 10. So if you're going to use 2 pips extra spread, you go to 12. Okay. So for example, with this one, what I'm going to look for, this is the low. Over here is 008. So I will be looking at 006. Okay. I will put my pending order there. I want to have a 12 pip spread. I mean, sorry, not a spread, a stop. And again, guys, it all comes down to your own back testing. Now, I know even within our team that some of us are trading 10 pips, some of us are trading 12, some are trading 15. Okay. And even some are trading 20. And that's all down to personal preference. That's all down to your own back testing on certain pairs. Okay. Now, again, there's no right or wrong answer. It's whatever works for you. And you'll only know that through your experience of back testing. Okay. So as you can see here, now what do we expect? Well, we expect price to come back and then drop. Okay. That is what we want to get into. That is the bullet. And we know it's high probability because of what I've told you before. We have the ascending nature. Okay. So as you can see, price has then popped back up and tagged me into this trade. Okay, so now I am currently in this trade and I'm waiting to see what happens next. Okay, now one of two things could happen. Just because we've had this ascending nature doesn't mean it has to go down. We know it's high probability, which means most of the time it will, but we have to keep a neutral bias. Okay, and the way we do that is by letting the market show its hand. So what I'm going to do now is I'm going to work out what I think might happen next. What could happen next is it could take me out and continue upwards, okay? Or we could take out this low and it will make me reduce my stops, okay? Or we could just continue sideways, okay, and range. But given that we've had this such an ascending nature, we've had this nice push, I broke this low, by looking at price action, we'll be expecting a continuation. Okay, let's see. And as you can see, the very next candle has taken out the low. Okay, now what has that allowed us to do straight away? Okay, we've entered this an hour ago, it's dropped, and we've already reduced our stops now. Okay, so I will move this down to the most recent low. You go backwards, that's the most recent high. Okay, so it allows us to minimize our risk. Okay, so we've moved that down and it's now at 0.12 pips, which is about 0.1% because we've got a 12 pip stop loss. So we're literally 0.1% of risk on the table. Okay, I will move these over to show you where my stops were because obviously I have to move the high and low lines. Okay, so let me just put these in. Sorry, guys. High and put this in as a low. Okay, just to keep it so you can see. I know you all know by now, but obviously there are some people that are new to the community and it's better that they can see it. Okay, so again, guys, what am I thinking? What I'm thinking of is this is an ascending nature. We've just got into our first trade that is only got 0.1% risk. But guess what, guys? We are at the top of this trend. And if it goes, it's going to go. And that's why it's such high probability because of the percentage you can make from being at the top of a move. Okay. Now, another thing I wanted to go over is I have a 0.1% risk. Now, will I scale in to the next position? And the answer is no. I will never, ever scale in to any positions if I have risk on the table. Now, you might ask yourself saying, well, it's only 0.12. It's only 0.1%. It's only 0.1%. Why wouldn't you scale in? And the answer to that question is, it's only 0.1%. But if you do that 10 times, it's now 1%. Okay. And that is not how you want to trade. You want to have a professional mindset. And the professional mindset is you only scale in to a position when you are risk free. Okay. And that's what we're about. We don't need to beg to get into every single trade. We don't need to do that. Okay, we have an abundance of opportunity. Okay, in one move, you can make 30-40% when you scale in. It's crazy. Okay, so as you can see here, guys, now we've taken out this low. I still have 0.1% risk, so I'm not looking to get into a trade. All I'm looking to do now is to secure this trade below break even or into profit. I say below break even, but I mean below on this chart. I mean actually above break even. So I want it to be at break even or better. Okay, so as I go on, I'm looking for a counter trend move and then a break of that low for me to reduce my risk. Okay, so as we play on, you can see now they've taken out this low here. Okay, we keep going down. Okay, and you can see the market's starting to show some momentum, which we expected because we had this ascending nature. Okay, so as we continue down, you see now that we have this counter trend move. Okay, so what do we want to expect next? Well, what we want to do is we want, after a counter trend move, we want to be able to break this most recent low. Now, if we break that, that will help us reduce our risk more, and then we'll be able to scale into a position. Okay, because we want to scale into positions, because scaling in helps us to add profit to the trades. Okay, so now you can see, guys, what's happened here. We've had this counter trend move and price action has now broke this most recent low. Okay, allowing us to now go from the low. So this is the new low. Okay, and then we go backwards and we see this is the most recent high. Okay, so that allows us now to move our stops into profit. Okay, so as you can see here, our stops have been moved into about 0.2%. Okay, at the end of the day, that's fine as long as we are reducing our risk. So now that I am risk free, I will be looking to get into another position. And now, as we know, this is the most recent low. We go backwards. That's the most recent high. Come back down. That's the most recent low within that range. Okay. So as you can see here, what I would do then is I would look to get into the position. The reason I say that is because I know my first trade is now better than break even. Okay, we've got 0.2 risk on the table. I mean, profit on the table. And now I'm looking to get into this position. Okay, so as we move forward, okay, we're moving forward. You can see it's just slightly broke this low again. Okay, so we can see that now that's the low. And we have this counter trend move. Okay, but one thing I am bearing in mind, okay, now I know that you would have had a pending order here, but actually it's around spread hours. And this is something that I really wanted to discuss with you all, because I know it's very easy to just click, 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 click when you are backtesting or when you are checking out a strategy, but you have to consider spread hours between 9 and 11 London time. Okay, now I don't trade them in my live trading, so I will not be trading them when I'm doing my backtesting. Okay, and the next candle that pops up will be 9 o'clock. So I personally wouldn't get involved in this trade. Okay, because I know that if I've got a 12 pip stop, right? So say I have a 12 pip stop, and for example, you get in spread hours, it moves against you 5 pips, and you've got a 7 pip spread. Now you've been knocked out of that position and added risk to your trade. Now, I don't have to try and get into every single trade. If it's around spread hours, I will not be getting into that trade. And I remember this trade live. Okay, I traded this move and I didn't get involved in that for that sheer reason. Okay, now I know that if I'd have got in here, okay, that it would have worked out. Okay, you would have had 12 pips and you would have gone down 2 pips under, and it would have worked out and I would have gained more profit. But again, guys, we have to be realistic when we are backtesting. We can't just jump in every single trade. Okay, you have to look at times. And this is why when people tell me that they backtest and they can backtest a year in a day, it's not possible. It's physically not possible if you're doing it properly. Okay, because you've got to work out, would you actually be in that trade? Okay, so I didn't get in that because of the spread. Okay, and as you can see, price action would have worked out for me. Okay, I would have been in that trade and I would have actually worked out. But again, I'm happy not to be in that trade because I know it's taking the risk off the table. Okay, I'm not willing to have risk on my chart just for the sake of being in a trade. Okay, that's just the way I trade. Now, if you choose to trade during spread hours, that's completely your own prerogative. That's up to you. Okay, I can only show you the way I'm trading. Now, as we've taken out this most recent low, right, you can see we go back up, and that's the most recent high. So we would bring this down, okay, to here, and we would also bring this down to here, and we would have reduced our, we would have moved our stops now to here. Okay, so the first trade now would be running at around 1.6%. Okay, sorry, 1.5%. Okay, but now what am I looking for next? Well, actually now I'm secure. Okay, I'm not around spread hours. I know that because spread hours were up here. I know that I'm looking to scale into a position. Okay, so we go back up. Most recent low would have been here. Okay, and what am I looking for next? Well, I'm looking to scale into the position. And as I've said to you guys before in the scaling video, we want to try and scale into the positions as much as possible. Okay, we want to get a little bit more aggressive. You all know the bullet strategy. We want to get in more aggressive. Most of my scalings come in with the bullet because they're a bit more aggressive than the bomb. Okay, but we know that it's likely to go down than it is up. Okay, we know that. We're already in the trade. So what risk do I have on the table? Well, let's have a look. Okay, I'm now going to have a pending order 2 pips below here. Okay, so as you can see, this is 78.6, so we're looking for 76.6. Okay, so around there, that's where we're looking to get into the position. We would have a 12 pip stop loss. Okay, and then if you think about it like this trade is currently locked in at 1.5%. Now, even if the worst case scenario comes and it takes me out, okay, this trade would be minus 1%. I'll still be net 0.5%. Okay, but here's the killer blow. Here's the actual best thing about this is that if it goes with me, I'm doubling my profit every pip. Okay, so every 1% I would make on this one, I would make 1% on this one also, which makes 2% rather than 1%. Okay, and every time you scale in, the more and more money you make. Okay, and the more and more percentage you make. That's why I'm happy to be a bit more aggressive with it. Okay, so as you can see now, we carry on here. As you can see, price has dropped down, but as you can see, it's tagged me in. Okay, and sometimes you won't even notice this when you're back testing because all you're doing is clicking so quickly. You might not even notice, especially if you don't put the pending order in. Now that's tagged me in and dropped, but it's happened so fast that if you wasn't prepared, okay, if you wasn't prepared during this, you wouldn't have got involved in that. And especially if you're back testing, you'll tend to find that all you're going to be doing is just tapping like that. And then it's just you're going to miss half of these trades. And then what you'll do is you'll go back and say, oh, how did I miss that? I don't know how I missed it. You've missed it because you're rushing the process. Okay. So at the moment, I still have a full 1% risk on here. I'll move this one down and then we'll carry on. Okay. And as you can see, price action has still moved down. We haven't had a counter trend move yet. Okay. And here you can see, now this stumps some people because it's a red candle. They assume it's not counter trend, but it didn't take out the most recent low here. Okay. So if we take out this low here, yeah, this means that this is the most recent high because we've had a counter trend move. Just because it's not blue, some people get confused about this. Okay. So what we're looking for now is for this low to be taken out, and it will allow us then to reduce our risk. And as you can see, the very next trade did that. So as you can see now, we have a new low. We go back up, and that would be the most recent high here. Okay. So we move this high down to here. Okay. And then what we do is we add our stops to there. Okay. So now, excuse me. Now the second trade has been reduced to 0.4%, and the first trade is now running at 2.8. Okay, so as you can see, over 3% already on these two trades. Okay, so what am I doing now? Now, this is where a lot of people make a mistake, and I've done it when I was mentoring. I've mentored a few people now, and I tend to notice what they do is they get very excited because now they're up 3%. Okay, they're probably running at around, I don't know, 5%. They actually get a bit excited and they actually forget that there is another move here. There is another trade. We've had a counter trend move, goes up, comes down, goes up, comes down. Okay, so the most recent low is here. Okay, for me, you have it there or there. For me, it's gone up, it's gone down, it's gone up, it's gone down. So for me, that's the most recent low. Okay, so what have I done? Well, I'm looking for 2 pips below that, which would be 60. What's it at now? That's at 64. We're looking at 62.8, so around there. Okay, 62.8. Okay, I have a 12 pip stop. And this is the thing. People sometimes ask me, I don't understand how you keep getting into these trades. Well, the reason I'm getting into these trades is because I'm prepared and because my judgment isn't clouded when I see that I'm in profit. Oh my God, I'm 20% up. Oh my God, I'm so happy. I'm just going to sit here and manage it. No, I'm getting into more trades. I'm going to keep milking the profit out of this. How do you think I'm making plus 60% last January? How do you think I'm already up massive amount of percentages every single month? Because I know how to squeeze the most out of the market. And that's the most important thing, guys. Okay, is to be not scared to get into the market. So what I'm looking at next is I'm looking to see if we can get tagged in. Okay, and as you can see, this trade here has just tagged me in. Okay, so I'm in the trade now. Okay, and as you can see, the market sort of give me a little bit of DD and then it's dropped. Okay, but if you look now at this blue candle, the blue candle actually had taken out the candle before. Okay, so as you can see, we're not looking to move or reduce our stops above this high here, which most people might have thought it would have been a good idea. Okay, because it did counter trend, but the low was taken out. And this is another one that people could get caught out on. You have to look at one low and the second low. If that low has broken, then that means that's still part of that move, which means we would not reduce our risk. Okay, now some people might have thought they reduced their risk above here, but we don't do that. Okay, the risk stays the same. We still have a full 1% risk, and we're looking now for a counter trend move and then a low break. Okay, so as you can see, the market has now started to move, giving us some more momentum to the downside. Okay, but this one has still full 1% risk, and these two are still locked in above that high. Okay, so what I'll be looking for now is a nice counter trend move and then a break of this low. Okay, and this will help me to then put this trade with risk free, and then I will allow me to then scale in again. Okay, and this is what I'll do. And the way I look at the market is I don't look at it in a way of, oh my God, it might take me out, it might take me out. I'm looking at an opportunity to actually get in again, to give me more opportunity, to give me more. Okay, so as we go down here, you can see we are still moving downwards. It's breaking lows. Okay, and now we are having a counter trend move. Okay, so now that the market is counter trend, what am I looking for next? Well, I want this low to break. Okay, and then I'll be able to secure my profit, so I'm below break even or above break even. I mean, when I say below, I'm talking about the chart. So I mean, when I'm break even or above profit. Okay, so we keep moving on and see what happens next. Okay, and you can see the market has pushed back up. It's given us quite a bit of a correction. Now, what am I looking at and what am I thinking about? Well, either one of two things will happen here. It will either come up and take me out, and if it does that, I'm completely happy because obviously I've reduced my risk on this one. That would be reduced to here, which would be about 0.8%. Okay. And then the other two we know are locked in profit. Okay. So I have actually the worst case scenario, I will end up probably with around 2%. Okay. But I'm looking at it always in a positive way. And I know if we are putting our highs and lows in the right place, as long as we have them above the most recent high, I know that it won't take me out if we are still in the same direction as a trend. Okay. So all I'm looking to do now is I'm not looking to get involved. All I want to see is what happens when we break this low here. Okay. Will we break that impulsively? And then will we be able to reduce our stop losses? And as you can see, price action is just ranging. Okay. And we have no idea whether it's going to go up or down. Okay. And there you go. It's just taken me out here now. Okay. So what am I looking at now? Where would my stops be? Well, this is now the new low. Okay. And we go backwards. That's the high, a low, and a high. So that's the most recent low, most recent high here. Okay. So that now allows me to have my third trade sitting at 0.6%. Okay. I have my second trade now running at, or locked in at 1.8. And my first trade is running now at 4.3%. Okay. And now you can see the amount of power from using the most recent highs and lows, because it allows us to stay in a trend when the market is trending. Okay. So what am I looking at now? Well, I know that this is the most recent low here. We go back up, we go back down. This would be my level. That would be the most recent low. And I'll be looking to get back in here. So we look at what 2 pips is below that, and we put a pending order. Okay. And we'll look to get involved again, because now we have reduced all of our stops and they are all locked in profit. Okay. So let's see what happens next. So if I move this over. And then what I'll do is I will put that there. That is now the new stops. Okay. And then we will continue down with the process. Okay. And as you can see now, we have in this counter trend move. Will that tag me in? And as you can see, guys, I would say on my own personal preference that that didn't tag me in. Okay, it's just above. Okay, so I will delete that, as when I won't delete it yet until we break the lows. So that didn't actually tag me in. Okay, and if we break the lows, which we have here, I will delete that order. Okay, so now that we've broken this low here, okay, and we've come back up and then we've come back down, where is the most recent high? Well, this would be our new low. Most recent high would be here. Okay, so we would move this to there. Okay, and then what we would do is we would move our stops, because that's the new most recent high, and we'll pull them all down. Okay, and as you can see, all we're doing is we're following the trend and we're just adding the percentages up. Okay, and as you can see, every time we move, it's just giving us more and more profit. Okay, so what am I looking at next? Well, next I'm looking at getting in again to see whether we can scale in. High, most recent low. Okay, we will set a pending order. Okay, and then what we would also have to do is look 2 pips below. So we will look at that one, have at 12. Okay, and then guys, we will look to get into the market if we can. Okay, so that's what we're looking at next, and we'll also be aware if there's any spread hours, because obviously it could just range back up to here. Okay, so as you can see, the market has continued down. We now have a counter trend move. Okay, and that counter trend move now has broken the lows. So that would now be deleted, because obviously we have now broken the lows, creating a new high and low. Okay, so now this would be the new low. This one would be the new high, because obviously it's counter trend. And what they'll do now is we'll move all our stops down with it. Okay, so as you can see here, we have number one running at around 7.7%. Next one, second one running at 5.2. And then we have the third one running at 4%. Okay, and now what we're doing is, are we looking to scale into the position? Yes, we are. Where would we look to scale in? Where's the most recent low? Well, we know this is the most recent low, but before we had a high, we had a low, we had a drop. Okay, so I would be looking to put position below here. We mark it so it's easier to see. Okay. And then we put it at 96. Okay. Oops, sorry. So we put it at 96 and there, which we also again have a 12 pip stop loss. And again, guys, we look for the market to tag us into the position. Okay, because again, all we want to do is take as much profit as we can out of the market. Okay, so let's see what happens. As you can see, the market continues to drop down. Okay, so this is our new lows, and then we get in a counter trend move. Okay, and then what you can see again, what has happened is we delete this order because again, we've made a low, a high, and a low. Okay, it's a counter trend move. This would now be the most recent high. Okay, this would now be the most recent low. Okay, so all we do now, guys, is we just move our stops again because we haven't been able to scale in. And as you can see, all we're doing is adding profit. Okay, showing you that as the market is moving, that we are just making so much more because rather than making 10% here, we've added trades with that. Okay, now we'll go over the totals at the end, but you can see now, just because I'm up all these percents, right? You might get the mentality is like, oh my God, I'm up. My God, I'm up 20+%. I'm not going to get into any more trades. No, I am getting into more trades. Okay, again, this is the most recent low. If price action pulls back to there, I'm back in again. Okay, because I'm trading the market. I'm allowing the market to show its hand, and I'm getting in the trades when it allows me to get in them. Okay, I'm not trying to tell the market that because I'm up 20%, it's going to turn around now. No, I'm thinking I want to milk this even more. It might go down another 100 pips. Okay, so for example, I've now put my pending order on. Okay, and we'll see if this one gets tagged in. Okay, and as you can see, that very next candle has tagged me into that position. Okay, now that's the new low, and we'll see what happens next. Now, as you can see, we've managed all these trades the same way. We look for a counter trend move. As you can see, that's not counter trend because it's broken the low. Okay, and as you can see now, we are still continuing down, and we haven't yet had a counter trend move. Okay, I still have a full 1% risk on this one, and obviously I have all of these locked in. Okay, so as you can see now, the market has just broken that low. Okay, the low was broken. Now, where is the most recent high? Well, the most recent high, you go up, and it's here. Okay, so that's the most recent high. And as you can see, I still have risk on the table. But what do I need to do next? Well, now I need to move my stops again. Okay. Okay, so if I move this down to here, we need to now move all of our other stops down. Okay, so we move them all down now, and we still have risk on the table, so we're not looking to scale in. Now the risk on this one would be same, around 0.1%. Okay, but again, I'm not looking to scale in. All I'm looking to do is to manage my trades. Okay, and I'm looking to see whether we can get another counter trend move, a drop, and then be able to get in again. Okay, once we secure our profit. Okay, and as you can see, the market has then taken me out for all of my trades. Okay, because they're all above that high. So that's the what happens in the bullet, and how we can maximize what we can and how we get into the positions. Okay, and you can see here, this one was a 0.1% loss. We had 11% on that one. We had 8% on that one and 7% on that one. Okay, so you can just see the amount of percentage you can make with the bullet. It's crazy. Okay, absolutely crazy. And as you can see here, we can see price action now has broken down and pulled back up. Okay, now what have we said is the highest probability? Well, we said the highest probability is if we have a descending nature, okay, which we have here. Okay, we now have price as trend has changed, okay, but it needs to close above. And then you can see that the market will then allow us to get back in again. And this is the great thing about this strategy, right? Is that you'll get taken out, but most of the time you'll get a descending or ascending nature at the bottom or the top. Okay. So if we carried on here, you can see now prices broke above. Okay. So now what are we looking for? Okay. Now we're looking to see whether we can get long because this is a high probability trade. Okay. Now that level there is 70. 72 is here, and we'll look to get involved with a 12 pip stop. Okay, and that's what we'll see, whether we get tagged in or out. I'm just going to move these over slightly so we can see what we're doing here, guys. Okay, and as you can see, let's see what happens next. We get tagged in. Okay, so we're in this position right now. So we're in this position to get long. Okay, I'm just going to move some of this stuff out of the way because, as I know, guys, I don't want you to not be able to see what I'm doing. Okay, so as you can see, price action has gone up from this descending nature. It's tagged us in. Okay, so what are we expecting next? Well, we want to see if price action can take out the high and then continue upwards. Okay, so as you can see here, price action has just taken out that high. Okay, so now that's allowed me to go back down and reduce my risk above the most recent low. Okay, so you can see there it's about 0.4%. Okay, on the table if that comes back and takes me out. Okay, so now we want to see if we can get a continuation push, and as you can see, I then got taken out for 0.4% loss. Okay, guys, so this is just an example of how you can get into the high probability bullet positions, and then once you're in them, how you can scale in. Okay, so just remember, guys, what we look for. We look for an ascending nature. We look for the price to break through the most recent low or high to give us a trend change, and then the first pullback to that. So here's the euro US dollar. And as you can see, guys, what we can see currently in price action, okay, we've just taken out the highs, okay, and you can see price action has pulled up and we've got a larger wick, okay. So we're quite aware that what we're looking for now, okay, either price action is going to give us a retrace, showing us that the momentum cannot be sustained, and then we'll be looking to see what happens after. Because as you know, the highest probability trades are the ones that we get an ascending nature and then a trend change and then a pullback to that. Okay, so what I'll be expecting is, as I've got this wick now, for a little pullback, okay, and then pull back up, then pull back down, pull back up, pull back down, pull back up, become ascending, right? And once it becomes ascending, what do we look for? Well, we look for this low here to be broken and then price to come back to that level for us to get in on the bullet. Okay, as I said, it's higher probability because we have an ascending nature. We have the first trend change and then a retrace to that, and then we expect it to drop. Okay, so that's what we forecasted, but what we want to do is go through price action and read price action and see what the market has to offer us. So as you can see, as we expected, price pulled back down now. Okay, so now what we're looking at is to see whether we can take out this high and whether we take it out impulsively or whether it retraces and shows us that we are corrective. Okay, so straight away we've taken out that high now. You can clearly see in price action we've taken out, we've taken out that high. And what has happened straight away, we've closed with a large wick, already telling us that momentum is slowing down. Okay, we've got these wicks here, we've got a pullback. Broke the high, couldn't be sustained, so the market pushed backwards. Okay, so what I expect is at the moment we are already seeing it is becoming ascending, so I expect price action now to pull back down. So now that we've taken out this high here, we have to look at the most counter trend move, which is here. Okay, we go backwards from the high, so the high is here now, move that up. Okay, and then we go backwards to find the most recent low, which is here. Okay, so we move that down to here, and as you can see, we've gone down, we've gone up, we've gone back down. Okay, so that currently is the most recent highs and lows, and we know that we've broken it correctively. So we want to see what happens next, whether we'll get a continuation pattern or whether we will drop down like we expect. Okay, so what do we expect to happen? Well, as this is the low, we expect for price action to drop and pull back to it and then go, because it's becoming ascending now. Okay, so that will always be in the back of our minds, and that's what we'll be prepared for. Okay, so as you can see, price action drop back down. Okay, now what's going to happen next? Will it take out the high and pull back? Okay, that'll be the most favorable one, but if not, we could just correct inside because we've got this large wick. Okay, as you can see, the most recent low hasn't been taken out, and now we're just ranging inside that. Okay, so for us to get involved, we want it to break the low, okay, and then pull back, or take out the high and show us whether it's got momentum or whether the momentum is slowing down and pulls back, showing us that it's still ascending. Okay, so as we click through, waiting for one or the other, and you can see here now we've just broke that high. Okay, so if we've broke that high, what we need to do now is we need to move this to the new high. Okay, and we need to go backwards to find the most recent low, which is here now. Okay, and again, we're still looking for the same process. Okay, so it could be there, it could be there. As it's only around 1 pip, I've said to you guys before, it's around 1 pip from the most recent to the major one. It's sometimes just worth putting it under that one. Okay, so again, it's down to your own preference, but I would put it under that one because it's only a pip. I've said this before many times. And actually, we're not in a trade currently, okay? Because if it's going to break both of those anyway, okay? So let's carry on and see what we want, because remember, guys, we're looking for the breaks of the highs. This has broken this high again and retraced, okay? Still an ascending nature, because we can't continue the momentum to the upside. Every time we're breaking, we're retracing. Every time we're breaking, we're retracing. Okay, we can see that the market cannot go upwards at the moment. It can't be sustained. So we know that it's more likely to drop down than it is go up. Okay, so as you can see, again, the market has just broke this high now, and we've got this large wick, showing us yet again that the momentum is still not to the upside. Okay, it's showing us weakness to the upside. So we move our highs, come back down to the most recent low. It's here because that's the move that went back up. So that's the new high and low. And yet we're still forecasting going down because there's no momentum to the upside just yet. But again, we will wait and let the market show its hand. Okay. And there we go. So we've had this nice break of the most recent low now. We can all see that. We forecasted it before time. So what we're going to do now is we're going to get involved. Okay. And again, I will use the same theory that I'm going to put 12 pips. So it'll be 2 pips below here. So that will be 55. I'll put it at 53. Okay. And then if I get tagged in, I will be happy to take that trade. So I will put 12 pips on my stop. Okay. And again, like I said, it's down to your own preference, what sort of stops you use on all different pairs. It can be different. Okay. Now that's down to your own preference on back testing. I'm just using a standard 12 just to show everyone, because a lot of people in the community at the moment are not getting involved in the trades. So rather than miss the trade by putting it exactly at the low, put it 2 pips below, but add 2 pips to the total at the top. Okay. So that's what I'm currently doing. So what I'm looking to now is to see whether we can get a push back to that level and get involved. Okay. Because we know that's a high probability opportunity. And now, as you can see, I got tagged in and it's dropped almost straight away. Okay. So now I'm currently in this trade. Okay. Now, again, why did I get into this trade? Now, this doesn't look like an obvious channel that just goes up, right? And that's why we have to read price action, okay? Because I can still see that there's no momentum to the upside. Look, first thing that stands out is we've got these large wicks, okay? Every time we broke a high, we've got wicks. Then we broke a high, we've got wicks. And we can see price is ascending, okay? We can clearly see that. So we know that this has a high probability that once the trend changes, yeah, that this ascending channel will play out. Okay, so that's why I'm currently in this trade now. Okay, now currently I have an open stop loss. I will not be getting involved until I see a push and a downwards move to protect my stops. Okay, so currently I am in this trade, and now we'll see how this plays out. And as you can see, momentum is continuing downwards. And now we've had a first counter trend move. Okay. Now remember, guys, we're not looking to get into any scalings or anything. All we want to do is just see this low be broken. Okay. Let's move this down. So these lows now have come down with the trend. Okay. But again, every low was broken down. We moved that down to the bottom. Okay. And now we've got this counter trend move. Okay. So as we move forward, we're expecting, and what we want to happen is this low here to be broken. Okay. We are aware that we've got this large wick, so it can create a bigger correction. Okay. So we're aware of that because of the experience we've had, and we're not looking to get into any trades until we break that low. Okay. And we can protect our stops. Okay. So you can see now that candle there broke the low. Excuse me. So this candle here now broke the low. Okay. This is the new low. Where is the new most recent high? Well, we go backwards and it's up here. Okay. So we move that down to here. Okay. So our stops currently now will be running at around 1%. Okay. And that would have been the high, the low. And as you can see, as that broke, okay, it didn't give us a close below big enough. So we wait for the next candle. Okay. Now this is the new low. We go back up. Okay. And we look for the most recent low. Okay. So that's the most recent high. That's the most recent low. So when we look for the next trade, we'll be looking for it along here. Okay. And as you can see, the market at the moment has just carried on down. Okay, so let's follow price action and see what it wants to do. So as you can see, the momentum has continued to the downside. Okay, and then as we push forward, we're waiting for a counter trend move that's still going down. And as you can see, the market has just continued to go down. So at the moment, we're not moving any of our stops. We're just managing our trade. Okay, because we need a counter trend move before we want to get into the market. Okay. So as you can see, the market has just continued down. And what we're doing now is we're not moving our stops. It's still secure at around 1%. And then we're just following the market. And can you see that what happens after we get an ascending nature? The bigger the ascending, the more longer it lasts, the quicker we fall. Okay. So as you can see now, it's dropping down. We're waiting for a counter trend move. Now here is a counter trend move. Why? Because we haven't broke this most recent low. Okay, so what we want to do now is wait for this low to be broken, and that will then secure us some more, it will secure us some more pips, some more percentage. Okay, we'll cut them down here, it will secure it, and then we'll look to get in again on the bullet. Okay, so let's have a look what happens next. And there it is. So that candle now has just broken the low. So if we go back up, that's the most recent high there. Okay. We look at this, bring this down. And then all we do, guys, is we move our stops. Okay. We move our stops down to here. And as you see, we secure now locked in 4.17%. Okay. So now what are we looking for? Well, now that that's broken the low, where is the most recent high? Well, if you go backwards, that's the most recent high. That will be the most recent low. Okay. So I would have a pending order here now. Okay. To take me short. 2 pips below here. So as you can see, 93. We have one at 91. And we have a nice 12 pip stop loss. Okay. And then what we'll do is we'll look to get involved again if we manage to get to that point. Okay. So 1 second. Okay. So let's have a look whether we can get a little push up and get involved in this trade. Okay. And as you can see, the market is ranging. And now we're taking out this most recent low. Okay. So we can delete this order. Okay. Because we didn't get involved. It didn't tag us in. And then we've got these new lows. Okay. We go back up. Where's the most recent high? Most recent high would have been here because we had to move up, down, up. Okay. And then what we would do is we'd secure more profit downwards. Okay. And then what we're doing, guys, is we're looking at price action. Okay, now from price action, where is the most recent low? We come up, we come down. Most recent low would be here. Price is above that, so we do not want to get involved in that yet. Okay, so as you can see, price now has dropped down. Okay, it's gone down, showing us momentum is still to the downside. But again, we haven't been triggered into any trades because, as you can see, they're very small candles and no really close below the low. That's really that solid. Okay, and as you can see here now, we have been taken out for our trade. Okay, now we know that price action has shown us here that we had this high probability trade, and as you can see, we got involved and we followed our management rule, and it's now taken us out for 5.35%. What I wanted to quickly go over, guys, also is remember, guys, everyone sees the market differently. So you might see other people in the market trading slightly different to the way you are. Okay, and this happens often. Just because I'm showing you one way of trading the bullet, there is also multiple other ways. As we know, you can use the most recent high, most recent low. You can use the major highs, major lows. You can also use different price action. Okay, so if someone posts up some charts and then it's not exactly how you trade it, it doesn't mean that person is wrong. Now, what I wanted to go over quickly was to go over a little bit of price action, which when we spoke about it during the team, there was a bit of confusion. And they just asked me my view on the price action. So I just wanted to quickly go over it. And if I quickly zoom in here, it's this bit of price action here. So as price came down, you see it come back up. We got this low, and then it's got here and then dropped. Okay. Now for me, okay, you could either have it at this low or you could have it here. Now I put it on this one because that's due to my own back testing and experience. Okay. Now obviously this is a low here, but I've seen this candle over and over again. And when I'm back testing, that's the way I'm trading it. Now there's no right or wrong answer. If you had it here, you would have still got into that trade and it wouldn't have made much of a difference. All you would have done is come down 2 pips and that would have moved down 2 pips. So actually it wouldn't have made much of a difference. And again, guys, I don't want you guys to get so fixated on little details like this, okay? You all know the rules. You all know you have the major highs, the major lows. You all know you have the most recent highs, the most recent lows. The way that we trade it is we trade it with the most recent highs and lows. Now, again, if there's a tiny bit of price action that you see often, for example, like this, I've seen this happen quite often where it comes up, comes down, gives you a dead low, pops back up and then drops. So for me, I like that as a low, okay? But again, you could have used this one. It wouldn't have made much of a difference. And I said to the guys in the team that, okay, it might give you a little bit of confusion. So if that's the case, then just use this low here. Only at the end of the day, I can only show you the way that I backtest through my own experience. Okay, I'm not going to start making up that I wouldn't have entered here when I would have. Okay, so that's just the way I see the market. And because I had so much experience backtesting, I noticed this candle a lot. Okay, when it pops down, comes back up, gives us a dead sort of candle, like a low, pops back up and then drops down. Okay, now that is just something through my own experience. Okay, now again, if you're not happy taking that and you want to just get in on the low, by all means do that. Okay, that's just down to my own personal experience. And I don't want anyone to get confused and start really questioning things. You all know how the strategy works. You all know where the most recent highs and lows are. Now, if someone isn't using the most recent highs and lows, because I know there are people in the community that use the major highs and lows, it doesn't mean that person is wrong. If he's back tested it and he's made a good percentage on that, on his back testing, and that's the way he wants to do it going forward, who are we to judge him on how he back tests and how he trades? We're not. We're only here to guide. You have to remember, I'm only here to guide you on the way that I trade. So I don't want you guys getting really fixated on these tiny little details that someone else may be trading slightly different to you. Okay, guys, hope you all have enjoyed the video and speak to you all soon.